Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video is Don't Act So Surprised, plus updates and 2 new stocks to watch. This is for the week of March 13th, 2017, up here in beautiful New Jersey, bracing for a nor'easter on Tuesday. So if you're in the area of that storm, then I wish you safety and all that. It's supposed to be up to 2 feet of snow, although that changes. I hear a foot of snow, 18 inches, whatever it is. But hopefully, and I'm knocking wood, it'll be the last snow of the year. Okay, so let's take a look at what happened in the market. So after President Trump, had addressed the Congress about a week and a half ago, we had gapped up nicely up to new highs, and then we started to pull back. We continued to pull back last week, and then Friday we got the gap up off the job numbers and closed below the open, but still with a gain. So the reason for the title of this video, Don't Act So Surprised, is I have been talking about watching for a pullback. Now, I'm not going to start screaming how I told you so and you could have made a ton of money, because the one thing I also said was I don't have a sell signal. Okay, the looking for the pullback was based on being overbought, was based on being stretched, was based on being not really having a pullback in a little bit of time, and that's not how the market works. The market is mean reverting. I also talked about watching the 20 EMA. If you signed up to the email list, you got that update intra-week. I was watching the 20 EMA for potential support, and you could sign up. It is absolutely free to join. Just go to attackthemarkets.com. I'll remind you about that at the end of the video, of course, as always. So what are we looking at here? Is this it? Are we just going to pull back and then we're going to just keep going higher from here? Well, while I still don't have a sell signal here yet, there is some evidence mounting that we could be in for a deeper pullback than just a quick pause like we've been seeing here, and here. Okay, proprietary breadth indicators that I use are signaling weakness up here. If you look at the cumulative advanced decline line, also showing weakness. Junk bonds, which I'll show you quick. We'll just go to go to HYG. And you can see right there, not up at the highs here. Now, if you look at junk, okay, so junk was not hitting new highs with the market, but it was in a pretty nice uptrend. And then after the dip into the election, just like the market, okay, it rallied out of it. But this is a pretty sharp pullback here, the sharpest we've seen in a little bit. And while that doesn't necessarily tell me, oh, okay, this in and of itself is a sell signal, it's telling me that the internals are starting to deteriorate. So what does this mean? Well, I still think we can go back up here, but if we don't get breadth in line and starting to trend higher again, and we don't get junk to turn, and we don't see a nice momentum push higher, I think we could be in for a short-term high. Now, again, do I think it's going to start a bear market? Nowhere near enough evidence to point to that, but we could get a pretty decent size correction in the market, a pause, whatever it is. And if you've been watching my videos, you know that I have been saying that I do not believe that we're just going to continue to have these simple type of pullbacks, like here and here and here. I think that we're going to get into a more complex pullback, something lasting something like this, and with a lot of zigzags and a lot of overlap, all right? Because the market likes to rotate in different ways, right? Sometimes it will just do, it will alternate between simple corrections or simple pullbacks and more complex pullbacks, okay, when it rotates. That's the correction part is actually the rotation in the market, all right? So, is it a sell signal here? No. Am I thinking we're definitely going to new highs here? No. We could fall a little short and continue to pull back here, but as of right now, I think it's be on the lookout here to see if the bulls come right back in. And like I said, watch the momentum and watch the breadth to see if it confirms. Here are the Qs. Okay, they held up okay comparatively to the broad market. Let's see if they're going to break out above 132. The Russell, showing relative weakness comparatively, but the Russell has been weak for a little bit. Again, when I talk about weak, I'm talking about relative to the broad market, okay, relative to the S&P 500. I'm not talking about, the Russell looks terrible. No, it doesn't look terrible, just relative weakness, okay? The small caps are showing that relative weakness. Here's the mid caps, also showing some relative weakness, although stronger than the small caps, and then we'll show the Dow just for academic use here. But again, I don't really believe the Dow has leadership qualities that we want to follow. I'm looking for the S&P 500 and the NASDAQ and the Russell. That's why I'm showing them. All right, so let's look at some sectors. Semiconductors, nope. Sorry about that. There it is. So semiconductors tagged a new high, so that's good. A lot of stocks acting well. Here's Clad Tanker. Here's Kulik and Sofa. Right, they look like they're in a bully flag. Here's NVIDIA. So NVIDIA was really strong in 16, came out of the gate 17 with a pullback, then a nice retest of highs, but since then, it's been consolidating here, so got to wait for the next move here. But NVIDIA could be a nice trade on the downside as well. Again, I don't really have the signal yet. I have the coil, though, so we want to watch which way it's going. There's no real edge here, despite the fact, it's up huge, and but the fact that it's between its 50 and its 200 day means it could go either way. I can't be biased for a short here, but I can absolutely look either way, especially out of a nice tight coil like this. What about Intel? Okay, Intel is more sloppy. How about the banks? Look at the banks. Banks look like they're in a nice pullback like the S&P. Came just shy of 100. Look at Bank of America sitting up there consolidating. Citigroup. J.P. Morgan in a pullback looks like the sector. Here's Northern Trust. Here's Zion. Okay. How about the broker-dealer index? Right on its 50-day moving average. Nice little, looks to me like a bull flag. Here's Goldman. Here's Morgan. Look at some tech stocks. Amazon. Okay, that came out of the coil, this little coil to the downside first, but now is out the upside. Here's Apple, consolidating at the highs, not giving up much ground. Here's Alphabet, a.k.a. Google. It'll always be Google to me, all right? But Alphabet looks like it's headed up for the highs here. How about like a Netflix? Consolidating. How about like a Microsoft, acting okay. How about a Cisco? Also acting okay. So, again, my speculation that a sell signal may be setting up here is all well and good, but it's got to have the confirmation, all right? Still in a pretty strong uptrend, still a lot of stocks looking okay, all right? How about the home builders? I like to look at the individual home builders. So here's Toll Brothers popped up, then had this inverse hammer there. You got a Beazer Homes, definitely not acting as strong. Ryland has been bought. You got Toll Brothers, Beazer. Okay, here's Pulte Homes, the nice reversal here. What about the Caterpillar? Sloppy now. John Deere, still grinding it out, nice and strong. Oil, oil has finally broken down. So we've been talking about oil for several months, how it's been coiling. Well, this is the USO, and it finally broke through the 200-day moving average and the 11 handle. Now, what I like to see from here is a pause, even a kiss back to where it broke, but even a pause or consolidation, and then look for a continuation there. You could play the inverse ETF if that sets up, if you can't get shares short of USO. If you like to do that, right? Some people don't even like to go short. I don't know if you're one of them. Here's gold. So gold has had so far a nice pullback off the 200-day moving average. It's right below the 50-day here. See what sets up. This is GLD. See if it gets a full retracement back down to the December lows. Bonds. Okay, looking for bonds to bottom out and try to get a push higher. Instead, boom, broke lower. So bonds broke lower with stocks. So let's recap before I go into the updates and the two new stocks. Right now, we have a pullback. We held the 20-day exponential moving average. A lot of stocks are still looking okay, not glaring trouble, but I am getting readings in breadth, junk bonds as well, that are not confirming that we are still as strong as we were. Therefore, if we do rally out of here, I want to be very careful to watch the momentum, to see if the breadth improves, to see if leadership improves. If not, we could be in for a deeper correction or deeper pullback than what we've seen. Again, I don't think it's the end of the bull market, anything. Don't think we're starting a bear market or anything like that. I'm just looking here to see if we can get a more complex correction that lasts a little bit longer. All right, so let's go through the stocks that I have been talking about and a couple of new stocks. All right, so first we have like a UNH, United Health Group, that popped to a new high. Private Bancorp, right, they're consolidating right at the 20 EMA. How about these stocks from last week? Yeah, A10 never broke out. Again, always have to be watching these for confirmation. LJPC, La Jolla Pharmaceutical. So that went out the downside. Again, no trigger, but then it wound up triggering on Friday as it came back up. Again, so it kind of switched. The pattern switched a little bit, and then it finally broke. Okay, you got Arista Networks. That broke. Okay, it's hanging out here up here at 125-ish. Whatever it is, see if it can get through that. Wage just went sideways, didn't really do anything. You got Hasbro, kind of peaked out the bottom, but you can adjust these. If they haven't broken, then the pattern could still be valid. There it goes. If I could speak, that would be great. So Hasbro still has the potential there to go. How about this Universal Display? Nice, tight consolidation. That is a new one for this week. Okay, so Universal Display Corporation, OLED. See if that pops, if that can go to 90. Going back to some last week's stocks, still you got Insight continuing to consolidate here in a bull flag. Here is Caesarstone, never broke out here. It's just more on the downside there. Here's Ralph Lauren, kind of still carving out this bear flag type of pattern right here. And then finally, another new stock is Ultra Clean Holdings. Okay, gap up consolidation, gap up consolidation. See if this one can go and break 15. So the two new ones, Ultra Clean Holdings, UCTT, and Universal Display Corporation, OLED. I kind of gave that away when I was going through the recap of last week's, but nice tight coil here. See if this can break and get going. Any questions, as always, tiny@attackthemarkets.com. Have a great week. If you're going to get caught in that nor'easter, stay safe. Talk to you soon.